All right, let's clear something up right out of the gate. A lot of contractors hear the word bond and they immediately think, cool, just another insurance policy. It's not. And honestly, misunderstanding the difference between insurance and bonds can cost you jobs, delay permits, kill contracts, and sometimes completely wreck opportunities for you to land large commercial jobs, especially here in Texas. So in this video, I'm gonna break down contractor bonds in plain English. No confusing legal talk, no insurance speak, no corporate nonsense. We're gonna cover what a surety bond actually is, how contractor bonds work, the difference between insurance and bonds, the types of contractor bonds available in Texas, what affects pricing, and the biggest mistake that contractors make when trying to get bonded. If you're a contractor in Texas, especially in places like San Antonio, Dallas, Austin, Houston, or anywhere growing fast, this is something you absolutely need to understand. Because the bigger the job gets, the more bonding starts to show up. So let's get into it. What is a surety bond? At the simplest level, a surety bond is a basic financial guarantee. That's it. It's a way of saying, hey, this contractor is going to do the job correctly, legally, and according to the contract terms. And this bond backs up that promise. Now, here's where people get confused. A bond involves three parties, not two. First, there's the contractor, you. Second, there's the obligee. That's usually going to be the city or state or project owner that's requiring the bond. And third, there's the surety company. That's the company providing the financial backing for the bond. So let me give you a real world example. Let's say a city in Texas requires a permit bond. The city wants protection that in case the work isn't completed properly or code requirements aren't followed. The bond company steps in and says, if this contractor fails to meet those obligations, there's financial backing available. That's the basic idea. But here's the part that contractors really need to understand. If the bond company pays out on a claim, you have to pay that money back. And honestly, that's the biggest thing that people misunderstand between bonds and insurance. And oftentimes don't realize it until it's too late. Okay, let's talk about the difference between insurance and bonds. This is probably the most important section of the entire video because as I mentioned earlier, this is where a lot of misunderstanding happens. Now, insurance protects you. A bond protects them. That's the easiest way to remember it. Your general liability policy protects your business. Your workers' comp policy protects your business and your employees. Your commercial auto, again, protects your business. But a contractor bond exists to protect the city, the project owner, general contractor, or whoever is requiring that you carry a bond. That's the huge difference. Here's another way to think about it. Insurance transfers risk. The bond guarantees performance or compliance. So if there's an insurance claim, the insurance company expects losses sometimes. That's literally what insurance is built for. But a bond works differently. The surety company expects you to fulfill your obligation. They're basically betting on your ability to complete the work and follow the agreement. That's why bond underwriting can feel way more personal than insurance underwriting. They're evaluating whether you're financially stable and trustworthy enough to back. Now, can bond claims happen? Absolutely. But unlike insurance claims, bond claims can come back on you financially, meaning the surety company may seek repayment from you, the contractor. That's why understanding indemnity agreements matter too. We'll touch more on that later. But if you take nothing else from this video, remember this. Insurance is protection for your business. A bond is a guarantee to someone else. Completely different purpose. Now, let's talk about the different types of contractor bonds that you'll see in Texas. Because quite frankly, not all bonds are the same. And depending on the type of work you actually do, you may run into several different types of bond requirements. We're gonna start with bid bonds. A bid bond is basically a way to show, yes, I'm serious about this project. It tells the project owner, if this contractor wins this bid, they intend to follow through and enter into a contract. These are pretty common for larger public projects or government work. Now let's talk about performance bonds. This is probably the one most contractors hear about. A performance bond guarantees the project is going to be completed according to the contract. If the contractor fails to perform, the bond may step in financially. These become way more common as the projects grow in size, especially with municipalities, schools, government contracts, larger commercial jobs. Now let's talk about payment bonds. Payment bonds help protect subcontractors and supplies. Basically, the project owner wants reassurances that subcontractors and suppliers are gonna get paid, because an unpaid subcontractor can create legal headaches fast. Now let's talk about licensing and permit bonds. These are pretty common in Texas. A lot of cities require permit bonds before certain contractors can actually pull permits. Depending on the city and trade, you might see electrical contractor bonds, plumbing bonds, HVAC bonds, signed contractor bonds, right-of-way bonds, and many more. And the requirements can vary city to city. What San Antonio requires may be different from what Houston requires. And that's why, honestly, a lot of contractors get frustrated so many times. There's no universal Texas contractor bond that covers everything. It often depends on the municipality that you're gonna do work for. Now, let's talk about maintenance bonds. This usually guarantees workmanship for a certain period of time after the project has been completed. So basically, if something fails because something wasn't done correctly, there's financial protection available. You'll commonly see this tied to larger commercial projects and public works. You know, a lot of contractors ask, why do they even require bonds in the first place? The simple answer is protection. Cities, counties, project owners all want financial protection if something goes wrong, especially in Texas where construction is exploding. Think about how much development is happening in places like San Antonio, Austin, Dallas, Houston, New Braunfels, Bernie, all over Central Texas. There's a lot of money moving through construction right now. Bonds are a great way to help reduce risk. For cities, bonds help protect taxpayers. For project owners, bonds help reduce the risk of uncompleted projects. For general contractors, bonds help to reduce the concern for subcontractors not completing their work. And for permitting departments, bonding requirements can help ensure that contractors are operating legally and responsibly. It's really a basic layer of accountability. And whether contractors like it or not, bonding becomes increasingly important as you go after larger commercial projects or public work. That's just a reality. Now, let's talk about pricing, because quite honestly, this trips up contractors a lot. A lot of people assume that bonds are priced like insurance. That's not exactly the case. Several things can impact the cost of a bond. Credit is a big one. For many contractor bonds, especially smaller permit or license bonds, personal credit matters. Better credit usually means better pricing. Experience. If you've been in business for a long period of time and you have a strong track record, that helps, especially for larger performance bonds. Surety companies want to know, can this contractor realistically handle this project? Financials. For larger bonds, financial strength matters. They may review business financials, work history, revenue, cash flow, and even existing obligations. Because again, they're evaluating the risk differently than an insurance company would. All right, now let's talk about claims history. Past bond problems can absolutely affect future eligibility, especially unpaid claims or legal disputes. Project size. Now, the bigger the project size, the more scrutiny comes with it. A contractor doing a small permit bond is very different from a contractor going after a multi-million-dollar performance bond. Let me finish with the biggest mistakes I see contractors make when it comes to bonding. First one, waiting until the last minute. This happens all the time. Contractor lands a project, then suddenly realizes that he needs a performance bond and he needs it immediately. And now everyone's scrambling, but what a lot of contractors fail to realize is that the bigger projects take time to underwrite, especially when financials are involved. So my advice to you, don't wait until the 11th hour to get a bond. The second mistake that contractors make is assuming that bonds are insurance. We've already touched on this, but it's worth repeating. A bond is not the same thing as insurance, and misunderstanding this can create financial surprises later. Choosing the cheapest option isn't always best. This is especially true if an agency or a provider doesn't understand contractors. You want somebody helping you understand the process, not just emailing paperwork and then disappearing. Another mistake that contractors make is not really understanding indemnification agreements. This is a big one. Many contractors sign these indemnification agreements without really understanding them. That agreement may give the surety bond company the right to seek repayment if they pay a claim. That's pretty serious. So my advice to you is understand what it is that you're signing. Also, not planning for growth. This is also huge. A lot of contractors only think about bonding when they need it, but contractors planning to grow into large commercial or public work should start building bonding relationships early, because bonding capacity matters once projects start scaling. At the end of the day, contractor bonds are really about trust. They help cities, project owners, and general contractors feel confident that the work is going to get done correctly. And the contractors who understand bonding early usually position themselves better for larger opportunities. So whether you need a quick permit bond, a contractor licensing bond, or help qualifying for a larger bonded project, our office helps Texas contractors understand the entire picture, not just the paperwork. If you've got questions about contractor bonds in Texas, drop them in the comments below. And if this video has helped clear things up for you, make sure to like, subscribe, and share with other contractors who probably still think that bonds and insurance are the same. Trust me, they're not. And that misunderstanding gets expensive fast.